So for our first question today, we have, what are the differences between being self-employed and being employed by a company?
That's a great question. And it's quite different. And a lot of it is psychological in some ways. The biggest one is, so when you're just a regular employee, you get a paycheck and they take out taxes, which, so you're like, how come my pay is this and I got this? Oh my goodness. When you're self-employed, there's nobody to take it out. So you get the gross amount and you have to see it, the taxes go back out. And I found that that is really challenging for people to see it go back out. They're like, oh, this is all my money. No, it's not my money. And that's really, really hard for people. I think, if you can grasp that and just know that a certain percentage is not yours, you're going to really set yourself up for success. On that same note, when you're an employee, at the end of the year, you get a W-2. So you wait for your W-2 and you file your taxes. Well, there's no W-2 for a self-employed person. So a lot of income is reported on what's called a 1099 form. And that is if someone pays you over $600, like as a consultant or in a for a project, they will issue you that. Otherwise, you just have cash and it's an honor code and you have to report the cash. And so that's different because you have to be better at keeping records, right? There's one not so great thing and then two good things that are positive. So the not so great thing is that you probably don't notice, but in addition to federal and state taxes on your pay, they take out Social Security and Medicare taxes. And what is taken out is half the liability. So you're paying half and your employer is paying half. Well, when you are self-employed, you're the employee and employer. So you're paying an additional 7.65% tax right off the bat off your profit. And there's nothing to withhold this from. So the double amount, which is 15.3%, is added onto the taxes due with your federal tax return. So all of a sudden your tax and your tax return are like, whoa, that got really big. Yeah. So, but it's not, it's an additional 7.65%. So just in your head, right off the bat, that's not yours.
Okay.
On the positive side, there are two positives. One is they changed the law. So if your employer does not reimburse you for any out-of-pocket expenses or licensing or continuing education, you cannot deduct that anymore as an employee. That got removed in the last major tax code. As a self-employed person, you need to keep all your records because all those expenses are tax deductible. So things that maybe weren't before can be. We're going to, we can talk about them later, but everything's deductible as most everything. We're going to go through it. And then the new thing, which I'm going to talk about in very general details, is, when you're an employee, whatever that number is on your W-2, you're taxed on it. But as a self-employed person, they added something new with the tax law where you're only taxed on the federal side on 80% of the net profit on there. They changed the corporate tax rate in the last tax law. So in order for small businesses to be at the same level, they added this 20% deduction. So hopefully your accountant will do that for you, but just know in your head on the federal side, you're only paying tax on 80% of your net profit. So that's a positive.